I can give you a few examples where doing nothing becomes the most expensive decision. I recently was doing planning with some new clients who have extensive real estate holdings, and they also have investment accounts. Their retirement investment accounts were 100% invested in money market funds. And I asked them, I said, how come these are in money market funds? And they said, well, when we opened the account 20 years ago, the stock market was at what we thought was a high, so we just put the money in cash and we didn't revisit it. They missed out of 8 to 10% of your earnings in the US stock market by letting that money sit in cash rather than having that account fully invested. The time horizon of that account was meant to be decades, not weeks or months, and a stock account would have been perfectly appropriate. The second area where I see indecision becoming very costly, if you are in the 3 million to say $10 million net worth range and you do not have a plan to cover long-term care costs when you're older, you might find that obtaining long-term care quotes between the ages of 50 and 55 might produce some pretty attractive quotes for long-term care insurance. Some of the policies I've seen, you can invest $80,000 over 10 years, and at age 85, that could generate $1 million of long-term care coverage for you. And if you pass away and you never use that long-term care, your heirs will get a $120,000 life insurance payout. But if you wait and you look at buying that long-term care policy when you're 65, the premiums for 10 years might be $160,000 rather than $80,000. Another example of doing nothing being the most expensive decision is not diversifying when your financial forecast shows you have enough income from your nest egg to meet all of your living expenses. I recently was working with an individual who had diversified some of their company stock, but they were convinced the stock would go up and outpace the market forever. And the stock recently fell by 30%. Their portfolio was down $2 million. Now, whether that was the right decision to hold off on diversifying more of the portfolio, there's no perfect answer, but the person might have had better sleep at night had they diversified more than 25% of their concentrated stock. Any stock can do well, but individual stocks inevitably fluctuate more than the overall stock market. I'm Peter Newman with Peak Wealth Planning.